All right, well, thank you for joining this webinar to discuss state tax updates from the 2025 session of the Maryland General Assembly. My name is Krista Sermon. I am the Deputy Director of the Legal Division here at the Comptroller's Office. A quick housekeeping note before we begin. Since the end of the legislative session, we have collected questions from stakeholders about the tax law changes, and we've done our best to incorporate answers to those questions into today's presentation. Additionally, we've created a page on our website, marylandcomptroller.gov, dedicated to providing information about the law changes. This will include frequently asked questions and answers. That's a document we have been diligently working on, and we hope to have that published very soon. While we will not be able to answer questions directly during today's presentation, please do feel free to use the Q&A feature if you have a question that is not addressed, and we'll try to incorporate that into future updates of the information on our webpage. Please do not include any confidential or proprietary information in the Q&A or in the chat. So on to the updates. So today we'll begin with updates related to income tax, we're going to move through that portion relatively quickly, as I know many of you are eager to hear about the sales and use tax updates as they relate to data and IT services. Next, I'll talk about the expansion of the, I'm really going to focus on the expansion of the sales and use tax base through the addition of new taxable services, a 3% tax on the sale of data and information technology services, and also software publishing services. Understanding that there are many businesses in the technology field that have never had to charge or collect sales and use tax before, I'll talk a bit about sales and use tax generally, including the obligations of sellers and buyers. I'll talk about the effective date of the legislation and how that impacts contracts in progress and subscriptions. I'll cover some special situations, including exemptions, and then round out the sales and use tax portion with sales and use tax updates on items other than tech. So we're going to really skip, correcting myself, and I'm a pinch hitter here. So we're going to really skip through the income tax portion because I know that everybody wants to hear about the sales and use tax. Skipping through that. Okay, sales and use tax. If you just give me a moment to orient myself, please. Data and information technology services and software publishing services. What is taxable beginning July 1st, 2025? The BRFA this year created new taxable services at a 3% rate. So what services are now taxable? The law says data or information technology services described under NAICS Sector 518 or 519 or subsector 5415, and system software or application software publishing services described under NAICS subsector 5132 are subject to the sales and use tax effective July 1st, 2025. Services subject to the tax are defined by reference to the NAICS sectors, the 2022 edition. So in the event that there's any new additions or alterations to the NAICS codes and what they describe, the Maryland law is tied to the 2022 edition. Services that meet these definitions are taxable whether or not a business reports these sectors as their primary business activity code, or the NAICS sector is assigned to a procurement or a contract. If you visit www.census.gov/NAICS and enter the appropriate code in the search field, you will find more details there. We've also published a draft of regulations that's available on our website, and we do list descriptions of the codes and the services that are found under each code that are now taxable. You can see, not sure if it's going to be on this slide, but you'll be able to see search results after searching subsector 5415. Here we are. Each of the highlighted records is a link that'll go to a deeper description of each of those NAICS codes. You would click on the link for subsector, for example, 541511, custom computer programming, and you'll see the list of activities that are included there. To assist taxpayers, we've taken the activity descriptions from the NAICS codes listed in the bill and included them in our emergency regulations and other guidance available on marylandcomptroller.gov. We've had a lot of questions come to GA and also to the legal division about what qualifies as an IT service and what is a digital product. Check the list of services and make sure that you're using the 2022 edition. If you're charging for packaged computer application software, then as of July 1st, 2025, you are providing a taxable service. Can you rely on a code if it's used in another context, such as a tax return? We know that businesses are required to enter one of these NAICS codes to define themselves as an entity. No, you cannot rely on the code that you've self-selected to identify your business's industry sector. You have to check the list of services, make sure you're using the 2022 edition. Don't use the codes you may have been using for years without checking on them. For example, a quick web search for software publishing will show how many results for subsector 511210 software publishers. However, that sector is not a valid NAICS code in the 2022 edition. Instead, software publishers are found under sector 5132 in the 2022 edition. What matters is what you are charging customers for. What matters is not the industry that you would categorize your business, but what is a description of the actual service that you're charging for, that you're charging the customer for. Sales and use tax. Who must collect and remit the tax? The legislature did not change the foundational sales and use tax law that we're all familiar with when we buy tangible goods. They merely expanded the base by adding new services to the list of taxable services. That's important to understand in terms of applying the existing law and regulations. The same sales and use tax principles apply whether you are selling t-shirts or technology. The Comptroller's office is not breaking new ground here, but we are trying to assist taxpayers in understanding how those laws apply to the sale of data and IT services and software publishing services. Vendors, which is what Maryland calls a seller by law, vendors who are selling or delivering tangible personal property, digital codes, digital products, or taxable services in Maryland must register for sales and use tax account and are required to collect the sales and use tax on a retail sale unless an exemption applies. In-state sellers selling to a Maryland buyer, the seller must collect. Out-of-state seller with physical presence in Maryland selling to a Maryland buyer, the seller must collect. A remote seller with no physical presence in Maryland selling to a Maryland buyer, the seller does have an obligation to collect if, during the previous calendar year or the current calendar year, the vendor meets the following criteria. Gross revenue from the sale of tangible personal property or taxable services delivered into Maryland exceeds $100,000, or if that vendor makes sales of tangible personal property or taxable services for delivery into Maryland in 200 or more separate transactions. Again, those requirements are only for remote sellers who do not have any physical presence in Maryland and are based outside the state. Smaller sellers who don't meet those, remote sellers who don't meet those criteria, who have under $100,000 of sales delivered into Maryland, or who make sales in less than 200 or more, in less than 200 separate transactions, they are not required to collect and remit the sales tax if they are a remote seller. Those criteria come from a Supreme Court case that's referred to as Wayfair, and they've been adopted by regulation in Maryland and in many other states as well. A vendor making a sale to a customer outside of Maryland does not need to charge the Maryland sales and use tax. They may still need to charge sales and use tax for the state that they are selling into, but they would have to consult that state's laws to figure out their obligations there. More on vendors. Vendors must have a sales and use tax license, which may be obtained by completing a combined registration application, also known as a CRA. You can do that by visiting marylandtaxconnect.gov. There is no fee for a sales and use tax license. A vendor is a trustee for the state and is liable for the collection of the sales and use tax for and on account of the state. Taxes generally due at the time of sale. Vendors are required to file a sales and use tax return and remit payment of the tax collected on or before the 20th of the month following the month when the sale is made. A credit of 0.9% of the gross amount of tax remitted up to a maximum of $500 per return is available if the sales and use tax return is remitted on time. We refer to this as a timely filing discount. Interest and late penalty apply if the tax is not remitted timely. Additionally, certain officers and individuals responsible for payment can be held personally liable if the sales and use tax is not remitted to the state. Here are a couple of snips of the sales and use tax form, Form 202, updated to reflect the new taxable services. Total sales of data and IT services and software publishing services and the actual tax collected are reported on the new line 16. Taxable purchases of these services for use where the tax was not paid to the seller are reported on the new line 32. A business can be both a seller of services and a buyer of services. Who pays the tax? A buyer is responsible for paying the sales and use tax. This is a tax imposed on the buyer. The buyer typically pays the tax to the vendor, who has an obligation to collect it and remit it to the state. So this is what we talk about when we talk about the vendor being a trustee of this money. It's paid by the buyer and collected and remitted to the state by the vendor. If the vendor fails to collect the sales and use tax, a buyer using the tangible personal property, digital code, digital product, or taxable service in Maryland is responsible for remitting the use tax to the state. A buyer reports the use tax on line 32. Sales and use tax, effective dates and impacts on contracts and subscriptions. Contracts for sales of digital and IT services and software publishing services entered into prior to July 1st, 2025 are not subject to sales and use tax. Proper records must be maintained regarding the date and terms of sale if no sales and use tax is collected, but delivery or payment is made after July 1st, 2025. Tax is due on subscription, lease, or other similar periodic payments based on the subscription period, regardless of the length of the subscription or lease or the date the subscription or lease was entered into. Each subscription payment period is considered to be a separate sale for sales and use tax purposes. Payment for the new taxable services with subscription periods due on or after July 1st, 2025 are subject to tax at the 3% rate. A contractor who purchases data or IT services or software publishing services after July 1st, 2025, in order to perform a service delivered as part of the contract entered into before July 1st, 2025, must pay 3% sales and use tax. The contractor's cost of performance in this case has increased. Moving on to some special situations. Exemptions. There were two new exemptions passed as part of the BRFA that apply to the sale of digital and IT services and software publishing services. These include sales of cloud computing to cybersecurity businesses and sales to or by certain qualified companies located in the University of Maryland's Discovery District. Part of our guidance that we'll be putting out will give a little bit more information about the University of Maryland Discovery District and where it is. Additional exemptions apply, such as sale for resale. And this is an existing exemption that applies to tangible personal property and has been around in the sales and use tax world for a while. If the buyer intends to resell the taxable service in the same form that the buyer receives it, and they have not made any use of that service themselves, they may issue a resale exemption or a resale certificate to the vendor that would absolve the vendor of their obligation to collect the sales and use tax. Then the buyer of that service would then, when they turn around and resell it, they would have the obligation to collect the tax. Additionally, a sale to a charitable or nonprofit tax exempt entity is going to be exempt from sales and use tax. This, again, is an existing exemption to all sales and use tax, not just the newly taxable services. The vendor is not required to charge tax if a vendor presents a valid exemption certificate. It cannot, the certificate cannot be expired. Exemption certificates issued to charitable and nonprofit entities are valid for a period of 5 years and must be renewed prior to expiration. Just to call a little bit of a difference out between something that a purchaser would issue it as a sale for resale as opposed to a sale to a charitable or nonprofit tax exempt entity. A sale for resale, you would issue a certificate that is generated by the buyer. We do have guidelines on our website as to what needs to be included in that, but that is just a piece of paper that is issued by the buyer themselves. For charitable or nonprofit tax exempt entities, those entities have a wallet size card that's called a SUTEC, sales and use tax exemption certificate, that's issued by the Comptroller's office that they would present to the vendor in order to purchase taxable tangible personal property or services tax free. So both of these are tax free sales, but they're going to look a little different in documentation. A multiple points of use certificate. This is a new concept that was introduced by the BRFA this year. A multiple points of use certificate may be presented by a buyer who determines at the time of sale that the services being purchased is for use both in Maryland and outside of Maryland. We are still standing up the process for exactly how the buyer will need to submit the application to the comptroller to use a multiple points of use certificate, which we're calling an MPU. But they will need to get that application to the comptroller's office and get permission from the comptroller to issue an MPU before presenting it to the vendor. That certificate will also, like the SUTEC or like a resale certificate, it will also relieve the vendor of their obligation to collect the sales tax. If approved by the comptroller, when a buyer provides the vendor with the MPU certificate, like I've said, the vendor is relieved of their responsibility to collect and remit the sales tax. The burden then shifts to the buyer to remit the use tax for the use in Maryland by the group that is going to be using that. So there's more. This is a new concept to Maryland, although it's been in place in other states. We will be issuing guidance on, giving more details about MPUs as well as information about how that application process will work with the comptroller's office. If a sales and use tax rate higher than 3% can be applied to a sale of tangible personal property, a digital code, a digital product, or a taxable service, then the higher rate shall apply in that case. So for example, software as a service sold to an individual is currently taxed at 6% as a digital product. Software as a service sold for an enterprise system is currently, before July 1st, exempt from the definition. Well, it's still going to be exempt from the definition of a digital product. But with the passage of this law, it is now a taxable digital or IT service. So software as a service sold for an enterprise system will be taxable at the 3% rate. Here, just go over a few additional miscellaneous updates from the 2025 legislative session on sales and use tax. I think we can skip ahead in the slides.
Krista, I don't think we have a slide.
Okay, no worries. Thank you. Yeah. So I'll just go over these. The sales and use tax rate for adult use cannabis increased from 9%, will increase from 9% to 12% effective July 1st. The bill also exempted the sale of cannabis between a licensed cannabis business and a registered cannabis nursery from Maryland sales and use tax. There had already existed an exemption for the sale of cannabis between licensed cannabis businesses, but there was a new entity that was introduced into the cannabis industry that's a cannabis nursery, and they're not required to be licensed. They're only required to be registered. So this portion of the bill ensures that sales between nurseries and other types of businesses in the cannabis industry are exempt from the sales and use tax. Cannabinoid beverages have been excluded from the definition of food and are taxable at the cannabis rate. That was an important clarification that needed to be made in the law, just to be clear that a cannabinoid beverage, although it may have met the definition of food, because it contains cannabis, it is a cannabis product and thus subject to tax at the cannabis rate, which will be 12% as of July 1st. The BRFA also repealed the following exemptions from sales and use tax. Snack food from a vending machine. The exemption still remains for milk, fresh fruit, fresh vegetables, or yogurt. But the salty snacks and other sort of junk food type snacks are no longer exempt from sales and use tax when sold from a vending machine. The exemption from sales and use tax for photographic material has been repealed, as has the exemption for custom computer software. And this sales and use tax exemption for sale of precious metal bullion or coins, it has been restricted to sales occurring at the Baltimore Convention Center only. So that is all I have for these slides and our presentation. I really appreciate your attention, especially with the last minute substitution. Just by attending today, you've demonstrated that you're interested in getting this right. I also understand there's a limited amount of information that I could cover in the time allotted. And I also understand, just based on some of the inquiries that the legal division is receiving, that there is an appetite for guidance as to particular taxpayer and business situations, and we're very sensitive to that, and we do want to receive those questions. So I don't believe I have it in the slides here, but I'll mention that if you or a client has a question about, this is the service I provide and is it taxable, you can send those questions to the legal division at compmdlegal@marylandtaxes.gov, and we will provide informal non-binding guidance in response to those. If you have any additional questions, please go ahead and enter them in the Q&A, or send them to the email address listed in the chat. And that is it for my portion of this presentation. Thank you for your attention.
Okay, thank you so much, Krista. And I have to say thank you to the entire team from the Maryland Comptroller's Office. They've been incredible in helping us to understand what's going to happen as of July 1st. And I also want to thank all of our attendees who have joined us today. I'm Mary Kane. I am the President and CEO of the Maryland Chamber of Commerce. We represent 7,000 businesses here in the state of Maryland. And whether you're in tech, consulting, media, or even professional services, this tax may affect how you deliver services, generate revenue, and structure your contracts or pricing. And that is why we've opened it up to as many people who can come and join us on this webinar. Remember, your insights are essential as we work to fully understand how this tax is going to affect businesses, and as we continue advocating for practical, workable solutions that support Maryland's economy. And if you're not yet a member of the Maryland Chamber, I encourage you to join us. We need your voice in our efforts to make Maryland more business-friendly and to push back against legislation that adds to the complexity and the cost of doing business here in Maryland. And now I'm going to turn it over to Grayson Wiggins, our Vice President of Government Affairs, to ask questions on behalf of our members and our attendees. Okay, Grayson, the floor is yours.
Thank you, Mary. And also thank you to the Comptroller's team who's been working with us throughout this process and has been exceptionally responsive. So we have some questions that came in the chat. We also have some questions that were sent to us directly prior to this webinar. If your question was asked and answered at our previous webinar on Monday, I may move past it just because we'll have a recording of that available next week. We're going to start with application of the tax. This is a question that's come up a lot from a geography perspective. So Krista, Matt, whoever on the Comptroller's team is best to answer this question, could you talk a little bit about, if the buyer of the service is located in a different state, whether or not that tax, the tax applies, in what situations it applies. I know the regs have been drafted, and for those who haven't seen those, they're on the Comptroller's website. It uses the term, it's taxable if the service is performed in Maryland. So could you just talk a little bit about when that applies from a geographic perspective?
Sure, I can respond to that one. I think I addressed this briefly in the presentation here, but if a sale is being made to a purchaser and delivered outside the state, Maryland sales and use tax does not apply. It is possible that sales and use tax in the state that it's being delivered to applies, and you're going to have to consult that state for their rules. But if it's being sent out of state, then the Maryland sales and use tax does not apply.
Thanks, Krista. And I know we talked about this some on Monday, but just because it's been a consistent question that's come up, can you talk a little bit about I know that we all know that the sales tax doesn't apply in sales to the federal government, but when a prime contractor has a contract with the federal government and then they have a subcontractor underneath that umbrella contract, can you talk about when and where the tax would apply in that situation?
So there's a couple different scenarios, and probably more than a couple, that that question addresses. A prime contractor that is selling their services to the federal government or any other entity that is not required to pay Maryland sales and use tax, those services are not going to be subject to the sales and use tax. To the extent that a prime contractor engages a subcontractor, if the prime contractor is purchasing products, purchasing taxable services from a subcontractor and then reselling them in the same form to the tax exempt entity, then the prime contractor could issue a resale certificate and then not pay the sales tax on that transaction, turn around and resell it and not collect the sales tax because they're selling to a tax exempt entity. However, if the prime contractor is after July 1st going to be purchasing products or taxable services from a subcontractor for the prime contractor's own use in executing a contract that happens to be exempt from sales and use tax on the other end, those services will be subject to sales and use tax. And I know this is a question that has come up quite a bit, and we are hoping to publish our Q&A in very shortly. There are a few example questions that address this situation in that Q&A. And again, I would encourage people to, if they have a very specific tax situation about their particular contract that they have a question about, to send that to the email address that I had mentioned before, which is compmd legal@marylandtaxes.gov.
Krista. And I want to welcome Deborah Gorman from the Comptroller's team back from technical difficulty purgatory. So welcome, Deborah. Thank you for joining us. And the next question is another one that's come up a lot is pre-existing contracts, whether or not the tax applies to contracts that were entered into before July 1. I think the Comptroller's office has done a good job of clarifying that it does not apply in those situations. But from a subscription perspective, could you talk about when that tax is going to apply, if it's related to a subscription or a term contract or things like that?
So I'll start out by talking about the difference between something that is an installment contract, for example, versus a subscription. A subscription and the taxability of a subscription is already treated in the Comptroller's regulations as each subscription period, each monthly payment, for example, is treated as a new sale. So if to the extent that you have a subscription to something that will become a taxable service after July 1st, your June payment is not subject to tax, but the July payment would be considered a new sale, and it's now going to be subject to tax. That's distinct from something that's more along the lines of an installment contract, which would be a contract that is fixed services for a fixed price that may be delivered over a long period of time. That may come with, for example, milestone payments upon each deliverable. If that contract was entered into prior to July 1st, then even payments that come after July 1st will not be taxable. That's the general principle. And I don't know, Debbie, if there was anything else you wanted to add there.
No, I think you did a good job.
Thank
Unless
you.
there are further questions on that.
Thanks, Krista and Debbie. I think sort of kind of along that line. Actually, I want to kind of segue away from that for a second and talk about what the services that are taxed. And I know that the bill from this past session identified the 4 NAICS codes. If a company has a question or needs to determine whether or not a service is going to be covered by one of those codes, We're getting a lot of questions in the chat about, when that applies. Can you just talk about, I know that they should go refer to those codes. Should they look at the definition of those different codes, what services are provided, and can you kind of talk about how they would make a determination on?
Yeah, exactly. The first step would be going to the census site, looking up those codes in the 2022 edition. There's a pretty good and detailed description of the services, although when you're looking at these as a business, you're going to have to do a little bit of translating, because as we've explained, and as you know, the NAICS codes are really used to describe an entity and as they're in an industry. So there's a little bit of mental translation that you're going to have to do to apply those definitions to the actual services provided. So that would certainly be the first step, is going to those NAICS codes and looking at the descriptions. We would encourage businesses to apply the ordinary, industry understanding of those descriptions to each service provided, which is another, I think, important thing to point out, that a particular business may provide more than one different type of service. They might be included, each service has to be analyzed separately. So there may be services that are provided that are described under those NAICS codes, and there may also be services provided by the same company that are outside of those NAICS codes. These are new services, newly taxable services, I know, to the industry and also to the state. So we're going to be, we're in this together. And again, I guess I would just encourage the businesses to make best efforts to to fit the services and to do that analysis. And if they do have any questions about particular services, they can consult the comptroller's office.
Thank you, Krista. And kind of like to your point there, if I'm a business and I provide services to another business, and the broad scope of those services, some are going to fall under those NAICS codes, some don't. Can you talk about, is the entire value of that service taxed, or is it just the pieces that fall underneath the codes?
So it's a little bit of a complex question. To the extent that each service is sort of listed separately and provided separately, not provided separately, but you might be selling a package of services. Some may be taxable and some not. There's a concept that already exists in sales and use tax called bundled transaction. So depending sort of on how the contract appears and how the parties agree to the services, there could be some non-taxable services that, if they're listed separately, remain non-taxable. But if there's a bundle of services provided that includes some taxable and some non-taxable services, that whole transaction is going to be taxable. So I know that may not be a satisfactory answer, but unfortunately in sales and use tax, things can be very fact specific. So
yeah, I would just add there, if you are selling separate items, you should itemize them separately if one's subject to tax and one's not subject to tax. If the instance of the bundling, what we mean by bundling is the components are not separately itemized and priced. If you sell it all for a single aggregated price, then the taxable services are going to require that the whole transaction be taxable there.
And thank you for that answer. And so another quick question from the chat here, for vendors, and I know we've talked about the resale exemption as it applies to the sales and use tax. So for vendors in that situation, what do they have a burden for tracking and reporting how that resale occurs? Or how would they go about if they ever needed to provide information to the comptroller's office to show that their services are being resold up through a prime and subcontractor relationship? Is there any information they need to provide to the comptroller's office?
In the case of a resale, like I described, the purchaser who is claiming the exemption, who is saying to the vendor, I'm not going to be paying tax on this because I'm going to resell it, they need to provide the vendor with a resale certificate. And there's more information about those, what's required for that on the webpage. The vendor needs to have that and needs to maintain a record of that in order to sort of validate their reason for not collecting and remitting sales tax on that sale. Likewise with a tax exempt entity that is claiming an exemption from sales and use tax based on a SUTEC. The vendor has an obligation to retain those records. If the question is, does the vendor have to go and like affirmatively, verify that the product was in fact resold? No, they have to. They need to maintain that the resale certificate that's provided to them by the purchaser.
And just going back to geography here for a second, and this is from the chat as well. So if a Maryland corporation has customers in Delaware and they provide remote labor to the Delaware customer, for instance, the person is sitting in the Maryland office performing the work remotely for a company in Delaware, is that service taxable?
Again, in the sales and use tax world, the sales and use tax applies based on where the services are delivered. So in that case, if the service is being provided it's being delivered in, outside of Maryland, then the Maryland sales and use tax would not apply.
And then can you talk a little bit about one of the questions that we've gotten a lot, and I see some instances here in the chat on the MPU certificate. I know the regs, I believe, require the vendor to get approval from the comptroller every time that MPU is utilized. Can you talk a little bit about that process?
So we are standing up an online application for an MPU. The purchaser will have to do that application and create the MPU certificate for each transaction where the service is going to be used both inside and outside of Maryland, because they're going to have to specify on that application the apportionment of where the service is being used. We understand that there is a large appetite for the multiple points of use certificate, and we are working to make that application to make it as non-burdensome as possible on the applicant. So we really do hope to make it a smooth and humming process when it is finally stood up.
Grace, and I've seen the question a couple of times, and I apologize if this was answered and I missed, but do you have to apply separately for each sale? And the answer is yes, because one of the requirements of that MPU certificate is that it includes the amount apportioned to Maryland versus outside of Maryland. And obviously then that answer can vary per sale.
Thanks, Debbie. Yeah, and if you guys see something in the chat that you want to touch on, please go ahead and jump in on that. And there seems to be some continued questions. I know we've touched on this already, but I'm just going to raise it again because this seems to be a pressing matter for a lot of people. So if a company is providing services to its clients on a month-to-month basis, a contract that runs month to month for IT services, if that contract was started before July 1st for IT services, is that exempt from the sales and use tax?
I think in that case, it sounds like a little bit of a fact-specific question, and it's going to depend on the terms of the contract, whether we would say that it's a subscription or more of an installment contract.
Right. Can you what would be some things for businesses to consider as they look at the facts of their situation there? I know that's a pretty broad question. Is going to depend upon, you know, whether those services they differ month to month or anything of that nature?
I mean, if you think of I'm going to, preface this by saying it's going to be fact specific. And I'll also say that the comptroller can't provide you with tax advice and how to maximize your, minimize your sales and use tax. But if you think of what the commonly understood definition of a subscription is, that's a good starting point. It's something that you would pay, for example, monthly. You would get generally the same service or product monthly, and you can cancel at any time. That's really what I think our common understanding of what a subscription is. Anything that's beyond that is, an ongoing relationship that was agreed to at the beginning of the relationship. This is a 5-year contract, and these are all the deliverables that we're going to submit, and this is how the payment is going to go. That's not a subscription. That's more of an installment contract. So those are sort of the two, not the far ends of it, but that's sort of a starting point for that analysis.
I think it's very helpful. Thank you. It's been asked a couple times in the chat as well. I know we covered this on Monday. I believe you sort of covered it in your presentation, but just to clarify, are nonprofits exempt from the sales and use tax the same way that they are currently?
Yes.
Okay.
Yes. Yep.
And do they need to still apply for the sales and use tax license if their services are all exempt?
Well, the sales and use tax exemption is for the purchaser of the taxable service or the product. So if you're a nonprofit, there is an application process to get a SUTEC that, like I said, is a little, a wallet-sized card, and that would exempt you from sales and use tax on your purchases. To the extent that those entities sell products, those are not necessarily exempt. They're not exempt from collecting the sales and use tax, except in very limited circumstances. So sales by nonprofits are still subject to sales and use tax. It's their purchases that aren't.
And Krista and also Deborah, and we have Michelle Mitchell from Maryland Tax Connect on as well. But I think that part of that question was also if you are selling to an individual with an exemption certificate, whether it's a nonprofit that's exempt or they have a resale certificate, do you still need to register, have a sales and use tax license and register to collect sales tax if you anticipate that all of your sales are going to be to exempt entities? Can you talk about that a little bit?
I see.
I was
Yeah,
just typing the answer to that one. Sorry, I was just in the midst of actually typing the answer to that one. But so the answer is if you are selling services that are subject to the tax, you are required to register. As the seller, there is an obligation for you to collect the tax unless and until you are presented with a buyer who is properly documenting that it is for resale or not. But if that, that there is not a guarantee that is going to happen in all instances. So you may also find yourself in the position being a purchaser of services, in which case then you would be able to remit any use tax that you owe.
And I guess maybe along that same line, if a company is purchasing software or services that are taxed on behalf of clients, would that be treated as a pass-through cost for a resale certificate? It's a question from the chat.
Could you repeat that for me, please?
Yeah, this is kind of an interesting one. If a business is purchasing software or services on behalf of their clients, would those be treated as a resale?
If they are purchased and resold in the same form in which they were purchased, and they were not at all used by the purchaser, then that would be a resale.
And then just to clarify, can you just talk? I know I mentioned the federal government is exempt from the sales and use tax. State government also exempt from sales and use tax, and are local governments exempt from the sales and use tax? I guess would be the question.
Local governments are also exempt from the Maryland sales and use tax. The, you know, municipalities within Maryland are considered part of the state. Going back to the previous question also, though, I just want to emphasize how Krista said some of these things are fact specific. You know, there's an existing body of law that it's not different for services than it is for tangible products. So, you know, if your contract is to provide something, be it physical things or a service to the federal government, you know, you're not necessarily, the government is exempt, but if you're buying them and you are performing a contract, then you're not able to use the federal government's exemption. That is not how that works. You are buying them so that you can perform a service or provide goods, either way, you know, be it tangible goods or a service.
Thanks, Debbie.
And
And
that's, oh, I was just going to clarify, that's specifically if you are purchasing them to fulfill you're purchasing these services to fulfill your contracts. You're not talking about where you're buying something for resale. You're talking about where you're purchasing, whether it's a service or a good, in order to fulfill your contract, correct?
Correct.
Thanks.
But you know, and again, circumstances vary, but if the government is buying, frequently the government's buying, the government is not always in the business of saying, hey, can you go be a buyer for me? Sometimes they are. So then resale would apply. But often they are contracting, you know, the terms of the contract are to deliver something, and you need to obtain either goods or services in order to fulfill the contract.
So kind of going back to the definition piece here, we're getting some questions in the chat. How strictly should businesses interpret the definitions of those codes? And I'll give you an example of kind of what I think the people in the chat are looking for. Let's say a service that is provided falls under one of those codes, a tech service that's being provided. If there are services that are rendered to set up a work site or something like that to provide those services that are not covered under the current NAICS codes that are in the statute, would those setup services be taxed as a connective piece to the service that's being provided that is taxable?
I think this goes back to the concept of the bundled transaction, and it depends on how the services are contracted for and charged. If each component of the total services and the total project is separately charged, only those that are taxable are taxable. But if the contract is more, says, you know, it bundles those together, and if any one of the services provided is taxable, the whole contract may become taxable. It depends on how the services are charged.
And what happens if, this is from the chat, if a business makes a determination and they feel that the service or the part of the contract does not fall under one of those codes, and is later determined that it does, you know, what happens in that case?
Debbie, do you want to speak to that one?
I'm sorry, I was answering a question in the
Sorry.
chat. I apologize.
Okay.
That's okay.
That's okay.
So the sales and use taxes, the obligation is on the one who is required to collect and remit. All sales and use tax returns are subject to audit. But it is just like with income tax, it is sort of an honor system with, you know, with the comptroller also having the authority to audit and enforce and potentially change your characterization of whether the service was taxable and what needed to be remitted. So it's always up to the taxpayer to make best efforts and to comport with the law in a good faith way.
And that's, so to the, I guess the next point here, and this is also from the chat. So we've established that if a company is getting this, being provided the service. If Virginia company is being provided the services by a Maryland business, because those services are being provided and delivered in Virginia, it's not taxable. However, the opposite would be taxable. So if a Virginia company is providing a service to Maryland company, it would be subject to 3% tax.
It would be subject to the Maryland sales and use tax, just as if the Virginia company was selling a T-shirt into Maryland.
Right. And so with this law being new, and this is kind of the question that's coming from the chat, with this law being new, if the Virginia company doesn't realize that this tax has been enacted and they don't charge the Maryland company the 3% tax, what occurs in that situation? Whose responsibility is it to remit that payment to the state?
So if the Virginia company is availing themselves of the Maryland market, they have a requirement to comply with Maryland sales and use tax law. And if upon audit, or if based on the comptroller's enforcement efforts, we discover that sales and use tax should have been collected and remitted and was not, they will be assessed for that tax.
But in the meantime, whether or not there's an audit, if a buyer in Maryland is purchasing these services for use in Maryland, and then there is no, if the 3% sales tax is not on their invoice, they're required to voluntarily remit the use tax.
Debbie, just to be clear, for everybody to have clarity, can you repeat that last part?
Sure. So you are a Maryland buyer purchasing these services after July 1st from a Virginia seller. And under Grayson's scenario, the Virginia seller didn't realize there's been a law change. They exceed the Wayfair threshold, so they're making more than $100,000 worth of sales into Maryland, or 200 transactions into Maryland. So they are, in fact, availing themselves of the Maryland market. They have nexus with the state. So the vendor is required to collect the sales tax, but they don't. That there's no sales tax on your invoice. The 3% sales tax is not on your invoice, and you are using these services in Maryland as the buyer, because the buyer always pays the tax, whether they pay it to the vendor as sales tax or if they pay it directly to the state as use tax. So in this example, the vendor has failed to collect. Buyer, you still have to remit the use tax to the state.
One of our last questions here as we run up on time. I know we talked about the MPU process and getting approval. Is there any, and I understand if you can't answer this question, is there any idea of what the turnaround time for approval of those will be once it's set up, with what businesses can expect?
Our goal would be to have them very quickly, but honestly, I can't give a specific time frame until we get that process up and running. But we are certainly anticipating doing that. Certainly we're talking hours to days, not anything like weeks or anything like that.
And I know that this came up on Monday, and I know that your team is working on it, but just for the people here today, the question that's been asked a couple of times is, will the existing R&D and manufacturing exemptions from sales tax still be able to be applied to IT services if they're used solely in R&D?
Yes, all the existing sales and use tax exemptions apply to these newly taxable services.
And sorry, Grayson, if I can just add one more thing, enhance my last answer. We are also building a process that could do the approval of these certificates in an automated fashion, but that's going to take us a little longer. So there's going to be a short window where we are doing these manual approvals of the MPU certificates. And that's what I was referring to when I was saying, hours to days. That's once we get it automated, then that should, not take any time at all.
And so just from a general perspective, and want to be respectful of your team's time, business, the turnaround time on this is quick for everybody with the July 1st effective date, businesses and your team included. And as businesses, they work to comply in good faith. Can you talk about the resources that the Comptroller's office is going to have available, the information that's going to be published, and what contact points businesses may want to utilize as they try and comply with this new law.
I've provided the email for those taxpayer specific questions, which is compmd legal at marylandtaxes.gov. For other tax help, we do have a service portal that we can put in the chat. And again, we do hope to publish some Q&A, which I think will be very helpful to this group and to the other and to other stakeholders in this. We do hope to publish that very soon.
And then for those who may not be aware, the Comptroller's office has a website dedicated to changes that were made to the sales and use tax in the Budget Reconciliation and Financing Act. It's a live page on their website where they're providing updates and information. That page includes a link to proposed regulations for application of this and implementation of this as it relates back to the legislation from last session. So I would encourage everyone to go and view that website and bookmark it, because I know the Comptroller's team is making live updates. So we have a lot more questions. We unfortunately couldn't get to everybody, but I'll turn it back over to Mary to close this out.
Okay, Grayson, thank you so much. And thank you again to the entire team from the Comptroller's office for all of this valuable presentation and information that you've given us today. And thank you to everyone who joined us, who want to learn how to do this the right way. Also, I have to give a shout out to the Chamber team, Grayson Wiggins, Hannah Allen, the Best Government Affairs team, and then Abby Ludwig, Sawyer Cornelius, and Jess Hicks is our marketing and communications team. They've done a great job. And then for those who couldn't attend, or for anyone who'd like to revisit this information, we'll be sharing a recap and the recording soon. We know this change brings uncertainty, and we're committed to ensuring Maryland businesses, the business community, is informed and you're prepared. And if you have questions or feedback following today's session, please don't hesitate to reach out. The more we hear from you, the better we can advocate on your behalf. And if you aren't a member of the Maryland Chamber yet, now is a great time to get involved. It's very important for your voice to be heard. The stakes are high, and having a strong, united business voice is more important than ever. Please don't hesitate to reach out to us with your questions or concerns. Your feedback helps us advocate more effectively and ensures your voice is heard in Annapolis and beyond. And that concludes today's webinar, and we hope to see you again soon.